What if I told you there's an investment paying 143% dividends that could either make you financially free or completely destroy your wealth? I'm talking about MSTY, the YieldMax ETF that's got everyone talking, and frankly, it's tearing the investing community apart. On one side, you've got people making thousands of dollars every single month, posting screenshots of their dividend payments, living their best lives. On the other side, you've got seasoned investors screaming that this is the most dangerous dividend trap they've ever seen. And here's the crazy part. People are literally taking out home equity loans and raiding their 401ks to buy this thing. I've seen the posts, I've read the stories, and honestly, it's both inspiring and terrifying at the same time. Today, I'm going to show you the real math behind MSTY's insane payouts, and by the end of this video, you'll know exactly whether this is the opportunity of a lifetime or a financial disaster waiting to happen. Let's start with the dream scenario because honestly, it sounds absolutely incredible. Picture this. You take $100,000 of your hard-earned money and you invest it into MSTY. Based on their current distribution rate of 143%, that means after 1 year, you would have received $143,000 in dividend payments on top of your original investment. Break that down monthly, and you're looking at roughly $12,000 being deposited into your account every single month. Think about what that means for your life. That's more than most people make at their full-time jobs. You could quit your job tomorrow, pay off your mortgage early, take that dream vacation you've been putting off for years, or finally buy that sports car you've had your eye on. It's the kind of passive income that most people spend decades trying to build through real estate or building a business. And MSTY is promising to deliver it in monthly installments, like clockwork. It sounds like the holy grail of investing, the answer to all your financial prayers. But here's what they don't tell you in those glossy marketing materials and YouTube ads. Think of MSTY like a high-stakes casino where Bitcoin is the game being played, and you're essentially betting on the house always winning. But instead of traditional gambling, MSTY uses a sophisticated strategy involving covered call options on MicroStrategy stock, which is ticker symbol MSTR. Now, MicroStrategy isn't your typical company. They've essentially turned themselves into a Bitcoin proxy by investing over $63 billion of their corporate treasury into Bitcoin. Every time Bitcoin moves up or down dramatically, MSTR stock follows, creating massive volatility. And volatility is exactly what MSTY feeds on. Here's how it works in simple terms. Imagine you own a highly volatile stock that swings wildly every day. You could sell someone the right to buy that stock from you at a higher price, and they pay you a premium for that right. If the stock doesn't reach that price, you keep the premium. That's essentially what MSTY does with MSTR stock, except they do it on a massive scale and distribute those premiums to shareholders as dividends. The more volatile MSTR gets, the higher the premiums, the bigger your monthly payments. But here's the critical detail that many people miss. MSTY doesn't actually own shares of MicroStrategy. Instead, they replicate MSTR's movements using a complex web of call and put options. This means you're not really investing in MicroStrategy or Bitcoin directly. You're investing in a financial derivative that's designed to track these movements while generating income. Let me tell you a story about two hypothetical investors to show you exactly what's happening with the numbers. Meet Sarah and Mike. Both started with $100,000 exactly 1 year ago, but they chose different paths. Sarah decided to put her money into MSTY because she was attracted to those monthly dividend payments. Mike, being more of a traditional growth investor, decided to buy shares of MicroStrategy directly. Fast forward 1 year, and here's what happened. Sarah received regular monthly dividend payments throughout the year, and her total return was 93.4%. That means her $100,000 grew to about $193,400, and she got to enjoy steady monthly income along the way. Not bad, right? But Mike, who just bought and held MSTR stock, saw a total return of around 140%. His $100,000 became $240,000. That's nearly $47,000 more than Sarah made, even though they were essentially betting on the same underlying asset. This difference illustrates the fundamental trade-off with MSTY. You're sacrificing growth potential for current income. Additionally, Sarah is paying about 1% in expense ratio fees, which means $1,000 per year on her $100,000 investment goes directly to the fund managers. Mike, owning the stock directly, pays standard brokerage fees that are essentially negligible. So while Sarah enjoyed the psychological benefit of regular income, Mike's patient approach resulted in significantly more wealth creation. Now let's talk about what keeps me up at night when I think about MSTY, and it's something called NAV decay. NAV stands for net asset value, and decay means it's slowly disappearing over time. Think of it like this. Imagine you own a house, and every month you sell off a piece of it to pay for your living expenses. Sure, you're getting monthly income, but eventually you'll have sold off so much of your house that what's left isn't worth very much. That's essentially what can happen with MSTY during certain market conditions. I've studied other YieldMax ETFs that have experienced severe NAV decay, and some of them have lost 50% or more of their value while paying out dividends. It's what sophisticated investors call a dividend trap. You're getting paid, but your principal investment is shrinking faster than the dividends can compensate. The cruel irony is that many investors see these high dividend payments and assume their investment is performing well, not realizing that they're essentially receiving their own money back in smaller installments. I've personally spoken with investors who put their entire retirement savings into high-yield ETFs like this, thinking they'd found the secret to early retirement, only to watch their net worth evaporate over time. The psychological trap is real. Those monthly payments feel so good that people ignore the declining account balance. And then there's the volatility dependency issue. MSTY's entire business model relies on MSTR stock remaining highly volatile. If Bitcoin ever stabilizes and MSTR becomes a boring, steady stock, the option premiums dry up and so do your dividends. Here's the uncomfortable truth about MSTY. Its fate is completely tied to Bitcoin's mood swings, and cryptocurrency markets are notoriously unpredictable. In a bull market where Bitcoin is climbing and creating massive volatility, MSTY can be incredibly profitable. But in a bear market or during periods of low volatility, the strategy can fall apart quickly. Let me paint you two scenarios. Scenario 1. Bitcoin continues its upward trend with regular dramatic swings. MSTR stock remains highly volatile, option premiums stay high, and MSTY continues paying out substantial dividends while maintaining reasonable NAV stability. Everyone's happy, and investors are making great returns. Scenario 2. Bitcoin enters a prolonged bear market, or, perhaps worse, a period of low volatility where it trades sideways for months. Option premiums collapse, dividend payments shrink dramatically, and the NAV begins decaying rapidly as the strategy fails to generate sufficient income to cover expenses and maintain the fund's value. Your monthly income disappears just when you need it most. The timing of your entry into MSTY could determine everything. Those investors who got in early during Bitcoin's bull run have done phenomenally well. But anyone who enters during peak excitement, right before a market downturn, could face devastating losses. There are warning signs to watch for: declining option premiums, reduced dividend payments, and most importantly, consistent NAV decline over multiple months. If you see these signals, it might be time to exit before the situation deteriorates further. So, who should actually consider investing in MSTY? First, you need to have a high risk tolerance and understand that this is essentially a speculative bet on Bitcoin's continued volatility. You should never, and I mean never, put more than 5% of your total portfolio into something like this. If you're retired and depend on investment income for living expenses, MSTY is probably too risky for your core holdings. However, if you're a younger investor with stable employment income who can afford to lose the money you're investing, and you're specifically looking for current income rather than long-term growth, then MSTY might fit into a small corner of your portfolio. You should also have a solid understanding of options trading and cryptocurrency markets, because that's essentially what you're investing in. Before putting any money into MSTY, research MicroStrategy's business model, understand Bitcoin's price history and volatility patterns, read the ETF's prospectus carefully, and most importantly, have a clear exit strategy. Know exactly under what conditions you'll sell, whether that's a certain percentage loss, a decline in dividend payments, or changes in the underlying market conditions. Also consider alternatives like traditional dividend growth stocks, REITs, or other income-generating investments that might provide more stable, though lower yields. So here we are at the crossroads. Are you team steady growth or team high income? The choice between MSTY and traditional investing really comes down to your personal risk tolerance, income needs, and investment timeline. I'm genuinely curious about your thoughts on this. Have any of you actually invested in MSTY or other YieldMax ETFs? What's been your experience? Are you making the monthly income you expected, or have you run into some of the challenges I've discussed? Drop your stories in the comments below because I read every single one, and your real-world experiences help other viewers make better decisions. If you found this breakdown helpful and want more controversial ETF analysis like this, make sure to subscribe and hit that notification bell. This video is for educational and informational purposes only. Investment performance shown is based on historical data and projections. Past performance doesn't guarantee future results. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. Thanks for watching.